Hello and welcome back to Explain the Charts. Today we are taking a deep dive into the GBPUSD currency pair to see what is going on in the markets and how the charts are reflecting the current sentiment. The GBPUSD has been under pressure recently as the Bank of England has signaled a dovish stance on interest rates, with market participants increasingly expecting a cut in November. This has weighed on the pound, leading to a weaker performance against the US dollar. Looking at the daily chart, we can see that the GBPUSD has been trending downwards since mid-October, breaking below the 1.30 level, a psychologically significant resistance point. This decline has been accentuated by a series of lower highs and lows, suggesting a bearish trend. A closer look at the recent candlesticks reveals a bearish engulfing pattern formed on the 11th of October, a powerful bearish signal that suggests the previous bullish trend has reversed. The bearish engulfing pattern is further corroborated by the Oversold Relative Strength Index, RSI, indicator, which indicates that the pound is currently oversold. While the GBPUSD is currently trading below the 1.30 level, there is potential for a rebound if the 1.30 to 1.29 support zone holds. If the pound can regain its footing above this zone, we could see a potential move back towards the 1.34 and 1.37 price zones. However, if the GBPUSD closes below the 1.2930 level, this would suggest a deeper decline. In this scenario, the next support level would likely be found around the 1.2570 mark, followed by 1.22. Let's switch to the 1-hour chart and zoom in on the last few days of trading. Here we can see that the GBPUSD has been consolidating between the 1.29 and 1.30 levels, indicating a lack of strong directional momentum. The recent consolidation is likely a result of traders waiting for further economic data releases, including the UK's labour market report and GDP figures, which could provide further insight into the direction of the pound. The US Consumer Price Index, CPI, release will also be closely watched, as any indication of easing inflation could fuel expectations for further rate cuts by the Federal Reserve, Fed. This would potentially weaken the dollar and provide support for the GBPUSD. We're currently seeing some signs of demand emerging on dips to the 1.2950/60 area on the 1-hour chart, as indicated by the oversold conditions on both intraday and daily charts. This suggests that some traders may be buying the pound at these lower levels, hoping for a rebound. However, for the GBPUSD to potentially trigger a minor rebound, it needs a positive session, higher close, today. If the pound can sustain a close above the 1.3020/30 area, this would provide a stronger indication of a short-term bullish bias. Zooming out to the 15-minute chart, we're seeing a lot of short-term fluctuations, indicative of the high volatility currently present in the GBPUSD pair. This makes it essential to be cautious when making trading decisions and to employ strict risk management strategies. Despite the short-term fluctuations, we're also observing some consolidation within a tight range, suggesting that the pound may be attempting to find its footing before making a significant move. The GBPUSD is currently trading below the 1.30 level, which was a major resistance level for the past few weeks. However, it is currently acting as support. This level is crucial for traders to watch, as a break below this level could signal a deeper decline. On the other hand, if the GBPUSD manages to break above the 1.30 level, this could signal a potential bullish breakout and a return to the previous upward trend. This breakout would be further reinforced by a stronger than expected economic performance in the UK or a dovish surprise by the Fed, which could weaken the dollar. In conclusion, the GBPUSD is currently in a delicate position, caught between bearish and bullish sentiment. The short-term technical indicators suggest a potential for a rebound, but the longer-term trend remains bearish. Key price levels to watch include the 1.30 support level, which is also a significant psychological level. If the pound can break above this level, it could signal a potential bullish breakout and a return to the previous upward trend. Conversely, a break below this level could signal a deeper decline. Another key level to watch is the 1.2930 level, which is the current support level on the daily chart. A close below this level would suggest a deeper decline. Traders should also pay attention to the upcoming economic data releases, including the UK's labour market report and GDP figures, as well as the US Consumer Price Index, CPI, release. These releases could provide further insight into the direction of the pound and the dollar. Overall, the GBPUSD remains a volatile currency pair with both short-term and long-term factors influencing its direction. Traders should remain vigilant, employing strict risk management strategies and carefully considering the latest news and economic data releases.